Bitcoin is facing resistance at 38,000, but UNI, IMX, VET, and ALGO may extend their up move in the short term, and Bitcoin rose above $38,000 on November 24th, but the bulls could not build upon this strength. This suggests hesitation to buy at higher levels. Bitcoin is on track to form a doji candlestick pattern on the weekly chart for the second consecutive week. This signals indecision among the bulls and the bears about the next directional move. And with Bitcoin maintaining near its 18-month high, BitMEX co-founder Arthur Hayes retained his bullish stance. In an X application, formerly Twitter post, Hayes says that the United States dollar liquidity was increasing, which is likely to push Bitcoin higher. Another bullish projection came from Plan B, creator of the stock-to-flow family of BTC price models, who said in a post on X that Bitcoin may not stay at the more current levels for long. Plan B expects Bitcoin to maintain an average price of at least $100,000 between 2024 and 2028. Analysts have turned increasingly bullish in the past few days, but traders should exercise caution because every uptrend is bound to have corrections. Could Bitcoin soar above $38,000 or start a corrective phase? Let's look at the charts of the top 5 cryptocurrencies that may outperform in the near term. And the Bitcoin's march higher has hit a wall near $37,980. But the bulls are not hurrying to close their positions. This shows that traders expect the uptrend to progress further, and the immediate support on the downside is the 20-day exponential moving average. If the price snaps back from this support, it will signal that every minor dip being purchased, that will increase the possibility of a break above 37,900. And if that happens, the BTC USDT pair could rally to $40,000. This level may pose a strong hurdle to the bulls, but if buyers flip the $38,000 level into support on the downside, a rally could stretch to $48,000. Conversely, if the price plummets below the 20-day EMA, it will indicate that traders are booking profits. The pair may then dump to 34,800. The bulls are trying to maintain the price above the moving averages, but are finding it difficult to overcome the obstacle at $37,980. The relative strength index is just above the midpoint, indicating that the bullish momentum is weakening. Okay, if the price slips below the 50 simple moving average, the pair may plunge to the uptrend line. The bulls are expected to defend this level with vigor. On the side, a break and close above $38,500 will indicate that bulls are in the driver's seat. And Uniswap fell below the 20-day EMA for $5.44 on November 21st, but the lower levels attracted aggressive buying by the bulls, and that started a sharp rally on November 22nd, pushed the price to $6.60 on November 24th. The up move is facing selling near the overhead resistance of 670 cents. The UNI USDT pair has pulled back to the 38.2% Fibonacci retracement level of $5.92. And the next stop here is $5.92 term $1 million on polish of their, even after passing a CRC, and a strong bounce off this zone will suggest that traders view the dips as a buying opportunity that may enhance the prospects of a breakout above 670. So it's such a move will complete a double bottom pattern which has a target objective of $9.60. The bullish momentum is likely to weaken below the 61.8% Fibonacci retracement level of $5.50. The bulls tried to protect the 20 EMA, but the bears had other plans. Pull the price below the 20 EMA, starting a deeper correction. If the price sustains below the 20 EMA, the pair may tumble to the 50 SMA. And if the price turns up from the current level or bounces off the 50 SMA, it will suggest that lower levels are being bought. The bulls will then again try to propel the price to the overhead resistance of 670. If this resistance is surmounted, the pair may skyrocket to $7.80. Immutable has been sustaining above the breakout level of $1.30 for the past several days, suggesting that bulls have the edge. The price may pull back to the zone between $1.30 and the 20-day EMA $1.20. This zone is likely to witness a tough battle between the bulls and the bears. But if the buyers prevail, the IMX USDT pair could climb to $1.86. Instead, if sellers tug the price below the support zone, it may trigger stops of short-term traders. That could accelerate selling and result in a sharper correction to the psychological level of $1. The 20 EMA on the 4-hour chart has flattened out, and the RSI is just below the midpoint, indicating a possible consolidation in the near term. The first support on the downside is 11.30 cents. If buyers maintain the price above this level, it will suggest that the 130 is acting as a new floor. On the upside, a break above the $1.50 will signal the resumption of the up move. The pair may travel to 159 and then to 163. Contrary to this assumption, a 10 to fall below $1.20 could tilt the short-term advantage in favor of the bears. Buyers propelled V-chain above the overhead resistance of 0.023 cents on November 26, but are struggling to sustain the higher levels as seen from the long wick on the candlestick. Sellers will try to track the aggressive bulls and pull the price to the 20-day EMA. If the price rebounds off this level, it will suggest a positive sentiment, and the bulls will then again attempt to overcome the obstacle at $0.23. If they can pull it off, the VEDIS USDT pair could rise to $0.27, and thereafter trying to reach the pattern target of $0.031. On the contrary, if bears sink the price below the 20-day EMA, it will indicate that the pair may remain stuck inside a large range between $0.014 and $0.023 for a while longer. The pair has slipped back below the breakout level of $0.023 cents, indicating that the bears have not given up and are selling at higher levels. The pair could next to reach the 20 EMA, which is an important level to watch out for. If the price rebounds off the 20 EMA, the bulls will make another attempt to drive the price above $0.023 and start the next leg of the rally to $0.027. On the other hand, a break below the 20 EMA may start a deeper correction to 0.2 cents. Algorand reached the overhead resistance of 14 cents on November 25th, where the bears are expected to mount a strong defense. If the bulls do not give up much ground from the current level, it will suggest that traders are holding onto their positions, expecting a move higher. That increases the likelihood of a rally above the 14 to 15 resistance zone. If that happens, the ALGO USDT pair will complete a cup and handle pattern. This reversal setup has a pattern target of 20 cents. If bears want to prevent the up move, they will have to drag the price below the critical support at 12 cents. If this level gives way, the pair may tumble equal to 0.11 cents and then to 0.9 cents. A 4-hour chart shows that the pair is oscillating inside the $12 to 15 range for some time. In a range, traders usually buy near the support and sell in close to the resistance. It is difficult to predict the direction of the breakout with certainty. Hence, traders may consider waiting for the breakout before taking large bets. Usually, if the price breaks above 15 cents, the pair is likely to start the next leg of the up move. The pair may first rise to 18 cents and then to 20 cents. This positive view will be invalidated if the price turns down and falls below 0.12 cents.